Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look at some charts that are in play today. Okay, first let's take a look at JDST. Okay, this is the Junior Gold Miners Index Bear 3 times. This is an inverse ETF. If you look here, you'll see the RSIs in the 50 to 70 bull zone. At 62, it still has room to run until overbought levels. Fasto has been above 80 here. It's currently at 93. If you look here at ADX with plus DI minus DI, plus DI failed to bull cross over ADX. Bulls, you want to see that green line get above the black line. If you look down here at the candles, what you'll see here is there was this long downtrend down in February, and there was a double bottom. Notice this green support line. Okay, hit twice down here, and then a nice uptrend started. Now it's been filling the jar back to this prior gap level. This red line right here, this horizontal resistance line, is the bottom of the gap, and this resistance line is the top of the gap. So currently, bulls want to see a break above the bottom of the gap. If that happens, you could see a gap fill and a run up to the 100-day simple moving average, which is currently at 27.49. And so that is the next target, as long as this green line here, which is the 50-day simple moving average, turns into support. So far, it has been holding. Notice how the candles have been riding this pink line. The pink line is EMA4, currently at 2180. If there's a close below that level, that will be a signal the chart is cooling down. You could see a pullback on the 50-day simple moving average test. If there's a break below the 50-day simple moving average, you could see a pullback down to the middle Bollinger Band. So as long as that level holds, this chart will be super strong, and there should be a push back up here to the 100-day simple moving average with a potential gap fill. If you look down here in February, on the second week here, these large volume bars, notice there at the bottom of the chart, this was the load. This was traders loading for the bounce, for the run that's happening right now. If you look down here, there was these MACD bullish crossover signal the start of the run, along with this parabolic SAR bullish flip. So yeah, JDST has been a really good swing trade. As long as the chart is bullish, the signal is to continue riding. Okay, let's look at WTIC light crude oil. Okay, currently RSI is hitting oversold levels down here at 30. Everybody knows it's been on this big pullback. You have Fasto now down here below 20 and at oversold levels. So super oversold on both RSI and Fasto. There was a bearish crossover in ADX with the green line crossing the black line to the downside. That's plus DI crossing ADX to the downside. That's signaling the bears have taken control. Look at minus DI. It's just been shooting up like a rocket. If you look over here at the candles, what you'll see is there was this sideways channel for the last couple months, and then support broke yesterday. Notice the support level was from back here in January. When that level broke, that also there was a break below the 100-day simple moving average, which is this gold line. That signaled more downside risk. Today there was another big drop down to the 200-day simple moving average, which is currently at 48.78. That is the key level to hold. If that breaks, there could be a bounce off of 47.50, which is the trend line here from the ascending support line. Notice the bottom of these candles. If you draw a support line going across those candles, that'll lead you up to about 47.50. Notice that this has been a big uptrend. Then it traded sideways, and instead of breaking out higher above 54.50, we've got a break below 51. And so now we've got a break below 50, and the 200-day simple moving average is being tested. This is a huge support level. It's at the key level with very oversold RSI and Fasto. So this is where it should bounce. You should get a technical bounce off of this level. If it fails to bounce on this level, that will signal more big downside risk. And there is a potential that there's a drop down to the 300-day simple moving average all the way down at 45. If you notice, there were two giant volume bars the last 2 days. So there's big volume behind the move. The bearish crossovers on MACD, these were signaling downside risk. Notice how the black lines below the blue blue line, that signals more downside risk. They were both pinched before that happened, and then parabolic SAR had what we call a bear flip. The dots flipped above the candles. That signals the potential start of a new downtrend. So yeah, so the candles are riding EMA4 resistance lower right now, and the close today was also well below the lower Bollinger Band. So many times what you'll see is the candles working their way back into the bands. EMA4 at 50.95 is going to be the key level to break. If there's a close above that, then you could see a run back up to EMA8. But currently, crude oil is in a downtrend, and it is signaling more downside risk. It needs to get back above the middle Bollinger Band for a new uptrend to start. Okay, let's look at IWM, ticker symbol IWM. This is the iShares Russell 2000, and this chart is pretty interesting as well. It had this nice rally back here in November into December, and then it pretty much traded sideways all the way into February, where it had this nice breakout, and then it topped out here right here in March, the first trading day in March. It topped out, and then now there's been 6 red candles in a row with a break below the middle Bollinger Band, and then below the 50-day simple moving average with the close yesterday below this green line, and then today there was a close below the lower Bollinger Band. So this has been a big sell-off. It's breaking key support levels. The next big support level is down here at 134, which is the January support level. That's back when it bounced off the 50-day simple moving average back in January. So if there's a break below 134, then you'll be talking about a potential drop down to 132 and the 100-day simple moving average. That is the next simple moving average support level. So there is a potential for a drop down to 132 if it fails to hold this level. Many times you'll see a bounce off the lower Bollinger Band. That's what happened back here. Let's see if it happens again. It could start riding the lower Bollinger Band lower, like it did back here when it was riding the lower Bollinger Band back in October into November. So yeah, this is also a start of a downtrend. The candles are forming below the middle Bollinger Band. Now they are below the 50-day simple moving average as well. Bullish stocks form candles above both the 50-day simple moving average and the middle Bollinger Band on the daily chart. So if candles are forming below, that's a major red flag, and that's signaling more downside risk. The bearish crossover on ADX with the green line crossing the red line to the downside, that was a bearish signal. The bearish crossovers on MACD, like I just talked about, notice how the black line crossed the blue line to the downside. Those were signaling downside risk, along with the parabolic SAR bullish flip. Notice the green dots here. The green dots were below the candles, and they flipped above. That's a red flag. SAR stands for stop and reverse. It's signaling that the uptrend, see the dots are below when it's an uptrend, the flip signals that a potential change in trend from the uptrend to a new downtrend. And so also we had RSI break below 50. That was a big red flag. Notice how it had been holding 50 down here and bouncing off of that level during the sideways trend. Stocks that are in a downtrend trade below 50, so it's not good. It needs to get back above 50 to get bullish again. If it drops down to 30, that's signaling more downside risk. It is oversold on Fast-O. Notice Fast-O is way down here at 7.87. So this is extreme oversold levels in Fast-O. It is due for a technical bounce. There was a crossover right here. So the saying is, 5 red candles in a row is a good setup for a bounce. So, this has been 6. So keep an eye on IWM. It is due for a bounce. What do you do when a stock's dropping like that? Or when you have the small caps are dropping, when you have a whole sector that's under pressure, and you look at the bear ETF, which is TZA, and this is the 3 times bear ETF for the small caps, and if you look here, it is heating up. Notice how it broke above 50. So now you have RSI above 50, heating up. Fast-O is above 80. You've got a bullish crossover on ADX. And then down here on the candles, you have 6 white candles in a row with this break above the 50-day simple moving average. See the green line here? Notice that was resistance back here in January and February. There was a close above that yesterday, and then today there's been follow through. So if that turns into support, that's going to signal more upside potential and eventually putting the 100-day simple moving average on deck. There's also been a close above this descending resistance line. See this red line here? This was resistance from this descending triangle pattern that had formed, and so the break above that is also another signal of more upside potential. And if you look down here, there was the MACD bullish crossovers. Those were signaling the chart was heating up along with the parabolic SAR bullish flip. The candle did close above the upper Bollinger Band. Many times the upper Bollinger Band is signaling the top of a run. So this could be a temporary top. You could see a pullback. On a pullback, you really want to see the 50-day simple moving average hold. If it gets back below that level, then it could consolidate again. As long as candles stay above the middle Bollinger Band, then the uptrend is intact. So yeah, if the candles stay above the middle Bollinger Band and the 50-day simple moving average, and they keep riding EMA4, that would be a very strong chart. Look here, there's 6 green candles in a row. So the bears have really been heating up. Let's take a look at a stock that did really well today. This is OCRX, up 71%. You can see it closed at overbought levels on RSI and FASTO, above 70s overbought on RSI, above 80s overbought on FASTO. There was a big bullish crossover here on ADX with the green line crossing the red line and the black line to the upside. So this has been a multi-day run. It started yesterday with this white candle that formed. Notice there was a gap up open yesterday, and then there was a close above the bottom of the gap. So this line right here is the bottom of this gap. There was a gap down. A gap down is created when there's an open lower before the. So there was a big drop on this day. It closed up here at $2, and the next day it opened all the way down here at 90 cents. And so that was the open, and then this is the wick on that day. And so you go by the top of the high of day for the day of the drop, and then that creates the bottom resistance level for the bottom of the gap. A lot of times that's tough to break. You can see it hit this level and it pulled back, but that closed yesterday above it. That was signaling more upside potential. And then there was another gap open today, and that's created 2 gaps in a row, and the gap was above the 50-day simple moving average, the green line here, and there was actually a close today above the 100-day simple moving average as well, the gold line. So that's going to be the key level to turn into support. Notice the upper wick on today's candle did hit the top of the gap, so the gap has been filled. It's filled the gap. There might be just a micro, like a penny or a fraction of a penny, but it looks like the gap's filled to me. And so many times filling the gap is a climax. We'll see if it can bust higher. If it can break higher above the top of the gap, then the 200-day simple moving average at 213 is the key level to break, and the 300-day simple moving average at 238. There's been big volume behind the move, and parabolic SAR bullish flip. So let's look at the weekly chart for OCRX. On this chart here, you can see it's heating up with FASTO and RSI both breaking above 50. And so if they can close tomorrow above 50 on both indicators, that would be a signal that the bulls are really heating up and the chart's starting to build strength. There has been a bullish crossover on ADX here. That's another signal that the chart is heating up. If you could see here, this is a real clear view of the gap fill. Notice it broke above the bottom of the gap, and then it's run all the way up to the top. So the gap is now filled. What bulls want to see is they want to see a close above this dotted purple line at the middle Bollinger Band at 178. If there can be a close above that tomorrow on Friday, because this is a weekly chart, weekly candles set at the closing bell on Friday. If it can close above that level, then a possible new uptrend can begin. And the next key level to break is going to be the 50-week simple moving average at 225, and so that's going to be the next key level. There's huge volume behind the move. Notice this volume spike back here in the first week of February. That's what we call the load. Traders loading for the move higher, and then there was a MACD bullish crossover. So yeah, so there's a huge move this week on that chart, and so we'll just have to see if it can close strong tomorrow on Friday. Okay, and then one more to look at is WEED.TO. You can also trade this on the over the counter. I believe that's TWMJF, and this is Canopy Growth, and this is one of the big cannabis marijuana sector companies from Canada, and I believe they have 500,000 square feet of mixed light and greenhouse grow space, indoor and greenhouse grow space. So they're a huge player up in the Canadian market, and they had this really big downtrend. Notice the break below the middle Bollinger Band here started this downtrend, and then it came down, and it actually, it was hitting the 50-day simple moving average on Tuesday. Didn't know if it was going to bounce off that level. It actually, on Thursday, it gapped down below that level. It hit the 100-day simple moving average, this gold line, and pulled up from that, and ended up closing up here for the close, which was well below the lower Bollinger Band. Notice the lower Bollinger Band's right here, and below the 50-day simple moving average. And then today, the candle was able to work its way back into the bands with the close above the lower Bollinger Band, above the 50-day simple moving average, but below EMA 4, which is the pink line. Notice how none of these candles have closed above EMA 4. So that's going to be the key level to break. If it fails to break that, then you're going to see potential continuation of this downtrend. It really needs to hold the 50-day simple moving average. If it can, then it could, now it's back in this downtrending channel. It's at the bottom of this channel, and so it could possibly run back up, maybe test the middle Bollinger Band here, which would be hitting the top of the channel, and it could find resistance and continue a downtrend. But in order to start a new uptrend, it's going to need to get above the middle Bollinger Band, which is currently at 12. So it had a nice bounce today. Notice there was a big volume spike yesterday with this long lower wick in yesterday's candle. That was the load. And then now bulls, they just need to see follow through. They need to see a close above EMA 4, and that would be a signal that the chart is starting to heat up. Okay, so this was a nice bounce today. Keep an eye on WEED.TO. All right, thank you very much for viewing this video. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.